Hi, good evening, everyone, and happy Lunar New Year. Okay, so thank you very much, everyone, for taking time to join us today. Today is the last day of Lunar New Year, so 元宵节快乐. Okay, so without further ado, let me just let you know that I'm very privileged and thankful to NUS to be able to share our global market outlook with you. Okay, so thank you for being here today. So playing your trump card, right? So I think a lot of things have been on our mind since November and December. So in December, we saw Trump won the election. Everyone thought there was going to be a close call, but it was obviously not a close call at all, right? It was really a clean sweep, I would say. Okay, so how did he do it, right? So what was his speech like? So he talked about things like energy independence, right? Drill more oil, higher dollar, lower taxes, and above all, making America great again. Okay. So in November, December, we also saw that the fact that Trump was not even in place, but the market front-run the policies to perfection. We saw a stronger dollar, higher 10-year treasury yields, Bitcoin, which is very much on everyone's mind, I believe. Equity markets especially, because equity markets take precedence from the previous reign of Donald Trump. Right? So here we are right now into the second month of him as president. So what do we think of the moving forward? How will markets take it? Okay. So like I said, these were the things that were on everyone's mind. So we look at the stronger dollar, right? And the reason why the stronger dollar is obviously because markets were trying to see how the tariffs were being imposed, okay? And then if you look back in December, when he nominated, or rather the Treasury Secretary nominate Scott Bessent came into mind, right? Everyone believes because of his experience of being the hedge fund manager for in the Wall Street for George Soros. He was very likable, and markets took it in his stride. So that was one of the reasons why the equity markets has rallied as well. Markets also believed that he would create a good check and balance in imposing tariffs, and also to bring down government spending in time to come. Right? So what are the key things to look out for? What markets are trading upon right now is to see how they can fulfill whatever they front run in November and December, right? So that's why we see a lot of, pretty much a bit more volatility in the market, especially in the past 6 weeks, because markets are trying to self-fulfill what they trying to predict in November and December, what we call front running, right, in the investment world. Okay. So the tax cuts that we do see right now is the heavily debated upon. Why is that so? Because if you do any kind of tax cuts, then you got to bring something back to the table, right? You got to really try to bring something back to the pie in terms of national income, in terms of a GDP point of view. Okay? So let's move on. Sorry about that. Next slide, please. Okay, thank you. Okay, so let's look at what our foundation views are. Okay, so what I like about our foundation view is a key for us to remember what has been constant before and after Trump, right? So the pre and the post-election factors make sense. A lot of markets, a lot of investors are distracted by what would be the outcome of the policies. But let's remember, there are certain things that stay constant, right? So things like interest rates, the central bank, corporate earnings, corporate profits. Okay, so these are the things that has been pretty constant in the equity markets of late. Okay, so hence this is the reason why we think that the U.S. equity markets would still be the best place to be for this particular year. Okay, for the last year, we do think that the corporate profits have really been driven by, of course, the good sentiments business, the low unemployment rates, the tight labor market, and of course the ongoing inflation, right? So we also like gold, of which Standard Chartered terms since beginning of last year, we have actually called for gold to be at 2008 by end of last year. Okay, so we still hold that stance. we do think that the ongoing geopolitical tensions, with or without Donald Trump, is definitely going to be in place, and that would drive gold prices a lot higher. Okay, so in terms of sector, we look at areas that pretty much may benefit from potential deregulation of the policies that Donald Trump may impose. Okay, so heavily regulated industries such as financials, such as technology, healthcare, from an equipment point of view, that would generally benefit for the rest of the year. Okay. Okay. So let's look at this chart. Okay, so what does this chart try to say? So right now, I think there are three things that Trump aims to achieve. One is a stronger dollar, for sure, which is echoed by our Treasury Secretary. Number two, a non-inflationary growth, which will be supported by lower oil prices and, of course, energy independence, right, by drilling more. Okay? So with that, we do think that having what we have over here, if you look at the crude oil price in the past, you can see that the moves in the same direction as the inflation expectations. Okay, so within the CPI numbers, within the PMI numbers, which is the Purchasing Manager Index, above 50 shows expansion and below 50 shows a contraction. And you can see that by and large, within the US context, the indexes has been above expansion, okay, for the past 2 years. Okay, so just now I touched a little bit on the consensus of earnings. So we look at the fact that moving into 2025, okay, so the colors there denotes the year, okay. So if you look at the year ending 2024, we do think that the consensus earning growth for MSCI World Index is generally expected to be much better, okay. But let me just show you the next slide over here. Okay, so how do we compare the reason why we like the US equities as compared to the rest of the world? As you can see, the consensus for earnings growth from 2024 moving into the projection of 2025, US is still set to be much better in terms of the corporate earnings from year on year, from the entire calendar year of 2025. Okay, so let's talk a little bit more on an income point of view. Okay, so our bank's view is that we do think that treasury yields could be higher for longer. So in September, we did see a slide in the 10-year treasury yields. So for those who have monitored the yields came down to about 3.7%, the 10-year yields. So 10-year yields is a reflection of a benchmark, right? So what happened right there? Did Fed cut rates really a lot? No, it didn't. So we had about 50 basis points cut in September, right? We saw that, and then the yield slide to 3.7, but inched back up again very, very quickly, up to 4.2, 4.5. So in August, and also in July and in September, we saw a constant decrease in the PMI figures, right? So PMI was shown to be fourth and fifth month in contraction, Purchasing Managers Index, business sentiments. So this has actually led the market to believe that it could actually increase the likelihood of more rate cuts moving into next 1 year. So let's always remember that markets are very forward-looking. So they price things in advance. Asset classes like bond yields, equity markets always look forward for either positive or negative news and start to price things in advance. Okay, so same over here. Bond yields. So market dialed back the expectations of rate cuts in December, right? Particularly in December, back to just about one rate cut for the entire 2025. Quite likely, I do believe that it will be so. Reason being is because, number one, you have very healthy labor market in the US. Unemployment rate currently stands at 4%, 4.1%. Long-term average shows to be about 4.5. We are pretty far from there. Okay? And then if you look at the CPI numbers, the core CPI, for the very first time, came down below 3. But how sustainable is that? So core takes away your volatile components, such as energy, such as food prices. So, of course, super core takes away the property prices as well. Okay? So, however, In our view, is that interest rates inevitably will still come down, but at a very much slower pace. Okay, so we actually so-called attribute this to a scenario called the soft landing scenario. Hence, we believe that the bonds right now, where it's trading last night about 4.4, it will actually slowly, gradually slide towards 4 to 4.25 by the year end. Okay, so what do we like over here? If you look at the chart over here, so the PCE is basically personal consumption expenditure, which is an indicator that is used by the central bank in the US, which is the Fed, to gauge the consumer sentiments in the US. So the gray bars over there actually shows the stock-bond correlations. Right? So positive correlation means they move in the same direction. Negative correlation means they move in the opposite direction. Okay? In years where we do see that the core PCE, which is similar to CPI, but is more of a personal capacity, stays in excess of 2%, the core relationship between stock and bond actually moves in the same direction. So what does this tell you? What this tells you is basically moving forward, because we do think that the core PCE would still be above 2%, this will actually encourage a lot of funds into multi-asset portfolios. Okay, so multi-asset portfolios means your 60% equity, 40% bonds, 70-30. These are called multi-asset portfolios, especially meaningful income generating portfolios. Okay, next, let's move into something closer to home. Okay, so China. I think China is on everyone's mind. It's on my mind every day. Okay. So if you look at China, right, how far have we come along in China? So if you look at China for the past 5 years, maybe just right after COVID, right? So China on its own has actually lost a lot of income from net exports from the GDP point of view. But this loss has not been able to be supplemented or made up by the domestic consumption. Okay, so hence, that's why China is where it is today. Okay? But honestly, in my view, I do think that because this year, it could be a little bit different. I think he has pure sheer determination to bring this through. He has enough experience to deal with Trump. And I do think that it could be a little bit different for China moving forward. Okay? So on the chart on the left-hand side, I was talking about this just now. Over the years, Donald Trump was in place in 2015. 2018, he launched the mega trade war against China. But however, since then, China has actually been less reliant on exports, imports from the imports into the US. Okay, so the chart actually shows that. But however, to the rest of the world, it has actually gradually increased as well. Okay. So we do think that because he has prior experience in dealing with Trump in the past, this would not be something new or shocking, okay, to China. Okay? So very recently, China reported a 5% GDP growth in the midst of still cooling consumer numbers, consumer inflation, still cooling property markets, but somehow it came out to be 5%, which I was also quite surprised. But nevertheless, I really think that this could be probably a game-changing year for China. Okay. Okay. Okay, so I have 2 more minutes left, I was told. So let me just wrap this up very, very quickly. Thank you for your patience. So gold. So why do we like gold? Okay, so gold can be invested in many, many different forms. You can buy paper gold, you can buy physical gold, you can invest in gold ETFs, you can even buy gold miners, right? So what do we actually like over here is really investing into gold as a commodity itself, okay? So central bank holdings have shown to grow over the years, right, as a result of a safe haven. And on top of that, with interest rates coming down, this makes gold even more appealing, right, with rates slowly coming down, okay? So if you look at performance of gold, yes, you can actually move your funds into gold miners, right? Barrick Gold, Newmont, all these names. But this would likely be also a little bit more of a laggard indicator because they are companies anyway, right? So they actually a little bit more laggard in terms of gold compared to gold performance, because they actually, their performance depends on not just the sentiments, but also on their corporate profits as well, which will then show on actual gold prices. Okay, so next. Okay, so just to wrap up, just nice. I'll just do a quick summary on the foundation asset class views, on our views. So we like US equities. We believe that within the developed markets world, this is the best place to be. It has more clarity in terms of earning trends. It has more clarity in terms of economic data that's been released month on month, quarter on quarter. Non-farm payrolls show to be quite consistent, right? So we also like gold and also the high yield bond space, okay? Particularly the high yield bond space will be the US short duration bonds, okay? So these US short duration bonds, particularly the secured and senior secured papers, are actually very, very low in terms of default rates. So this would be also one of our favorite as well. Not to mention, last but not least, what do we like is that we like the small mid-cap opportunities within the US space, because we believe that with Trump's view to not just repatriate businesses, but to support local businesses made in America, this will benefit the smaller and also medium businesses. Okay, so with this, I will end my presentation. Back to the speaker. Thank you.
Thank you so much, Ms. Chu, for the insightful presentation. And please take your seat on stage. At the same time, allow me to introduce the rest of the panel for this evening's discussion. They are Prof. Edward Tay, our Adjunct Associate Professor from the Asian Institute of Digital Finance in NUS. Prof. Tay will also be moderating today's discussion, as well as Mr. Benjamin Lee, Senior Advisor at the Innovation Hub Singapore Center at Bank for International Settlements.
All right. Well, thank you very much, Reno. And please, ladies and gentlemen, let's give our esteemed panel speakers a big round of applause, please. Thank you so much. Thank you so much. Well, the whole day we have been hearing about one guy, Donald Trump, Donald Trump, Donald Trump. So, I'd like to introduce myself before I introduce some other gentlemen to you guys, which is equally polarizing, but definitely very relevant for our discussion today. Hi, my name is Edward Tay. I'm the Associate Professor here. I'm the Adjunct Professor here with the Asian Institute for Digital Finance. And I myself actually have a host range of engagements with the financial fields. I myself is a VC. I have invested and nurtured 4 deep tech unicorns, including 1 AIs and 2 climate tech. And I sit on listed companies right now here in SGX, and I sit on a few public boards, one of which was the Singapore Accreditation Council, where we actually manage AIs and digitization standards, as well as I'm the current Vice Chairman for the SG Tech, supporting the Singapore Enterprise chapter. So very happy to have everyone, and plus I'm also a graduate here. I'm an alumni in '94 School of Engineering. So thank you so much, alumni, for coming back to the school. And I would like to actually first let Benjamin introduce a little bit of herself, and also Rina to introduce a little bit of ourselves before we go into the discussions. So let's keep it a little bit light first, shall we? Yes, Benjamin or Rina?
Hi, sorry for the late introduction. So Standard Chartered is my, I think, the third or fourth bank. So I've been in the banking industry, wealth management for the past 15, 16 years. So I started my career in banking in year 2007. I think it's more than 15 years. Sorry, I didn't count before this. Okay, in any case, I started my career as a banker. I've been in private banks like UBS, ABN, AMRO Offshore, supporting the Malaysian and the Indonesian high net worth clients. After that, I moved to advisory position. My first advisory position was in OCBC as an investment counselor, okay, supporting wealth management clients as well. So after that, I have moved on to Citibank, support the Citi private client as a treasury specialist. for also a good number of years, and Standard Chartered is currently where I am. I've been here since last June, okay, as an investments advisor, supporting both priority and priority private clients. Yeah, thank you.
Hello. Hello. Okay. Thanks. It's left to me. Firstly, good to be, with fellow alumni. NUS as well, like Prof. Tay. Graduated now how long? 2006 from the Faculty of Arts and Social Sciences and read Political Science. So it's always good to be back, especially on the 15th day of the new year with family. Right now, and I mean, really, on a topic like this, the experts are Rina, Prof. Tay, and yourselves. I'm here to also absorb and learn as much as I can. I've been, on the sort of regulator, public, authority route. Although some of my journey is a bit, different, and at least on the sort of, forwards of innovation space, that's where I am now. I'm with the MAS as my organization, but I've been seconded out for the last 5 years to a setup called the Bank for International Settlements. Now, it's a little bit of an obscure organization, but think of them as they're central bank of central banks. So they are a little bit like the IMF, World Bank, but their members are central banks around the world. We have about 90 central banks who are members of the BIS. But 5 years ago, essentially, the current general manager of the BIS decided to set up what he calls, what we now have is a sort of network of innovation centers and labs around the world. There are 7 centers around the world. Singapore is one of the first 3 that were set up, in fact, 5 years ago. And I think a lot of the work that we do was to, again, take a leaf of what is happening in the finance space. A lot of innovations work is ongoing. And this setup was one where we wanted to bring together the central bank, the national authorities, to look at where opportunities are to first understand the technology, right? And I'm sure we'll get into that discussion through the course of the day. These days, things happen very rapidly. And for regulators, sometimes, if you are sort of coming from an investor's lens, a regulator's lens is, how do I keep this safe for everybody? And so again, for some of this, I think the belief is nothing like doing it yourself. Test out, build the prototypes, the proof of concepts, draw lessons from it, and then publish, sort of findings and recommendations, so that, again, as national authorities consider this, whether they want to implement things or new policy changes, we are informed by practical experiments and work. And then maybe just some by way of a last of introduction point, some of the work that we do, for example, ranges a whole gamut, and I know today's topic looks at things like climate, looks at things like of course AI, cybersecurity. Those things are all part of the remit, I think, that we do. But we also consider things like even sort of infrastructure rails like payments. Today, and I'm sure we can get into that. That's an area that I've worked very closely on. Payments here, things like PayNow has become ubiquitous. Everybody uses it, and it's almost second nature. Nobody thinks about going to well, very few people probably go and bank checks and so on and so forth. But on a cross-border basis, it doesn't happen. Today, we still, in this day and age when messages should be instantaneous, a cross-border payment still takes us 3-4 days, and often at very high cost. So again, the work that we've been trying to do is to see how can we do or tap on existing infrastructure like PayNow, but scale that in its equivalent. There are 70 of these instant payment systems out there, at least at last count. And so how do we make sure that when you go across the board, you can have that same payment experience, whether you're paying a taxi driver, a chai masala store when you're in Mumbai, a durian seller, and so same thing, how to make that happen. And I think that's something from our lab that we've been building over the last 5 years, and we're very close to what's something that we think will be more operational in due course. So that's the type of work that we do. So I hope that provides a bit of experience. And then maybe the last bit was just that I'm happy to share, but again, being regulator mode, the views are entirely personal and not representative of my institutions that I'm associated with. So with that, Prof, let me pass it back.
Thank you. I'm sure the audience is in for the treat because we have really very good and experienced panels. So allow me to throw in 2 wow spanner instead of 1, right? Yes, Donald Trump. I'm pretty sick of his name already. Okay, The second person that I'd like to introduce is actually a guy which is pretty innocuous. His name is Lai Wenfeng. He is actually the founder for DeepSeek. The founder for DeepSeek. Just now Rina was saying that she's very, very... people in the FIs, we have to make sure that we cover China aggressively because US and China are our top two biggest financial markets. If we miss either one of us, our commission will be half, or even we may even lose our jobs for that matter itself. So China is very important. Out of the blue, during where in the midst of festivity in the Chinese New Year, today we are at the end of this, but can you remember in the beginning when all our WhatsApps and Telegrams and Facebook, everything is so overwhelmed by this DeepSeek, and who knows what about DeepSeek? Actually, we do know, right? Here in NUS, we do know. In fact, we have just launched a course in DeepSeek, right? Some of you guys who are keen on that itself, feel free to check it out, right? This bundles is all the way outside itself. So this gentleman, 40 years old, he managed to came out with an alternative, a Chinese equivalent alternative that compete very effectively with ChatGPT. This really shows the breadth and the breathtaking changes of artificial intelligence, and it's impacting every one of us across financial industries and others. And not only that, not only AI. The third gentleman I'd like to introduce is Elon Musk. Why do I talk about Elon Musk, right? Yes. I mean, for all his antics, guys, what I'd like to highlight is two things. Today, he just made, or rather in US time, he just made an open bid to buy out the OpenAI for about 97 billion. This is one guy who 66% of his net worth is tied to one company, which is Tesla, the world's largest EV, right? So as investors, we have to think, is sustainability still something for us to go forward, right? US has just put up for Paris Agreement, right? And many of the banks, interestingly, have silently pulled out from all these net zeros or climate financials coalitions. Should investors take note? Should we continue in these areas? So I'd like to throw these three gentlemen out there, right? One is tariff guys, right, Donald's. One is actually an AI guy, Wenfeng, and then one is a sustainability guy, and of course, we have the ever interesting cryptos. Now we have a crypto-friendly US president, and we have Elon Musk, who is also increasingly investing a lot into this. So maybe I open this up to our esteemed panelists and just share a little bit, in their own personal capacities about what is happening and how to make sense of this really, really volatile investment community.
I shall start first, and then So I think Prof, you're right that it's manifested now in individuals who are dominating the headlines. In truth, if you look at some of the underlying factors, though, I think what is happening, more importantly, is there's a lot of because of the geopolitical environments and how this have come about. I think there's a lot of decoupling that's also starting to take place. And what I think many of us have now taken for granted, this multilateral order, where again countries work in a very collective spirit. Increasingly, I think it's not that it won't happen. I mean, it will take a lot to undo and unravel. But increasingly, you'll find, I think, almost pockets or systems that are a bit more isolated, a bit more sort of walled. Now, is this a good thing or a bad thing? My sense is, again, if you look at the course of history, these things move in sort of pendulum cycles. And it's at sort of fracture points that seem like it's sort of, when the fissures are most evident. But as it starts to swing, then again, the sort of momentum changes. So I think, it's to say that these things happen. I don't know how much can be controlled, how much can be changed. But you should then also consider what it means in a world where it's no longer a single, dominant, narrative or group, right? There will be difference of perspective, difference of groupings. And then, I mean, for us, who've been in international organizations, multilateral order, we're trying to cling on to say, look, again, if the world is going to be one where there will be these pockets, how do we still ensure that there's interoperability? How do you ensure that, again, between the wall gardens there is an access bridge or point? And even that happens in, as technology evolves. So that's not, geopolitically, I think those things are at the heart of this, that sort of broader context. But even technology as it evolves, I think Prof, you brought up crypto. So for the longest time, money supply, money systems have also been very mature. I don't think overnight, even as that gains popularity, I don't think overnight your M1, M0 trust in commercial bank and central bank monies will go away. For the the vast majority, those things remain the dominant sort of form. But increasingly, you have to accept that again there will be different sort of asset classes, different sort of sort of offerings. Then the question becomes, how do you ensure that across these sort of different pockets there is again that sort of common ledger system or way to reconcile these things. So I think those things again are where we are at least trying to build on the margins. If the world is going to be one where it's about a bit more fractured, a bit more sort of how do you keep the bridges open and accessible at least. And I think that's at least from our perspective. I'm happy to I'm sure the three gentlemen will come back through the course of this course, and happy to dive further. But let me pass to Rina for her thoughts.
I absolutely agree with that. I'll start with crypto. So crypto in my mind continues to remain a really bizarre topic, right? I think it's everyone's mind as well. Okay, so why would crypto rally so much? Remember what I talked about front running, right? So people were talking about how the deregulation of that, the particular industry, crypto especially, would benefit from the potential deregulation. Eventually, would crypto even be, accepted as a legal tender? In the near future, right? Would that even be so? Okay, but however, let's put things into context, right? So we put Donald Trump aside. Okay, so if you look at Bitcoin on its own, Bitcoin has been around, or well speculated, if you like to put it that way, for many, many years, right? But why is it gaining so much popularity these days? Okay, so a couple of factors over there. Number one, access. I think in crypto terms, right, crypto is a lot more accessible right now to mainstream investors. Okay, so that's one reason why I think crypto is here to stay with or without Donald Trump. Okay, so next, the availability and with access, what are the ways that you can actually invest in? We see a lot of institutional flows into crypto, particularly my friends who work with certain private banks can structure notes with crypto as reference prices. Right? Investors like you and I, we can buy crypto ETFs, right? So this accessibility is absolutely mind-blowing, if you ask me. And at the speed that it is growing, it will continue to be where it is, okay? It will not just go over overnight. Next, we're talking about infrastructure. I think the infrastructure behind crypto, people always relate to it like all these dark mining, centers, but I think that is really quite long gone. So the mature infrastructure of crypto has bring it to where it is today. Okay, so with or without Donald Trump, honestly, I do think that crypto is here to stay. Okay, so that's my point of view of crypto. Okay, so on the sustainability, right, talk about things like ESG, right? It's more than just about green energy. It's more than just about electric cars, carbon net zero. It's a lot about also good corporate practices, good corporate governance. These are things that I think moving forward, within the banking perspective, right? These are things that we investors should be conscious about, right? We have always, within banking, we also advocate sustainable mandates, sustainable portfolios to our clients, really at the back of how this would be a longer, this would preserve your capital, your portfolio in a more rightful manner in time to come. Okay, so within Singapore context itself, usually when I speak to my clients, I like to put examples into context. We have this net carbon zero by 2030, right? Which is, I believe, is still there. Okay, and along the way, while our Minister Indrani Raja rolled out this carbon net zero 2030, we've seen overnight street full of electric cars. BYD was flooding the street just overnight. So many of these cars, right? It doesn't just come overnight, right? It's really because the government supports it. Okay. So on top of that, within the investment point of view, within the financial institutions point of view, right? We have something called the green bonds, green financing. So private companies, public companies are encouraged to issue green bonds. So green bonds are meant to finance capital expenditure, approved projects that are linked to more sustainable purposes. Okay, so this green bond, we have seen a lot of green bonds in the markets recently, which our clients have also had the privilege to subscribe to. So those are actually my two thoughts. I think sustainability is definitely here to stay. I do think that crypto is also here to stay.
Thank you, Nick. Yes, so in my professional capacities, I think among the three, I'm the most bullish on sustainability. Why? I sit on the boards of the International Capital Market Association, ICMAs. ICMA is actually the national standard bodies when we launch any of the green bonds or sustainability linked bonds. So all the banks in the world are literally, including MAS here, the plan was that we want to launch about 35 billion Singapore dollars of green bonds to support all our green infrastructures. So at that level itself, internationally, we do see more and more money moving into green infrastructures. And has the flow slowed down? Definitely. Why? Because major financial institutions are adopting a wait and see. I think the challenge now is whether the green and the non-green will win. I have no idea. But markets have spoken. It has slowed down already. So what will happen in the next few quarters, I think is truly interesting. We are looking at how different regulators around the world are choosing. Are they going to remain in Paris Agreement or are they going to be pulling up? We are starting to see different national policies also fine-tweaking. We are also monitoring many of these as we go forward because I think this is really important. The overall national narrative has to make sense. So that's sustainability. AI, we are still awaiting as well, but we are awaiting for different reasons. I think we were quite lucky because 5 years ago, I lectured in the Master of Science in Venture Creation here in NUS. And we have a whole group, about 200 over students, postgraduates who are here. They want to find their companies and they want to do fundraisings. And many of them are already proposing AI startups a few years back, even before AI is really hot. Yes, and Singapore here, in year 2020, we have slightly under 400 family offices. But to date, 2025, we are sitting about 1,700, 1,700. If you look at EDB website, right, family office. That means huge amount of money that's coming onto the board. When I actually ask around, and then reach out to all the fund managers, especially those who are managing the family office, introducing them, all the AI founders and startups from my students, I get very, very low interest. I get very, very low interest. Maybe Singapore is not the market. Maybe China is the market. Maybe US is the market. Maybe we are very different markets. But this is definitely something I think a lot of VCs, a lot of investors here in Southeast Asia, we are really waiting. The most interesting one is actually the crypto, right? So I have two groups of guys. My younger counterparts, right? Usually those below 30s. They are the Web3 guys. They do they do Unity, BlockDeFi, programming languages that is very, very different. They don't use WhatsApp. They have no Facebook. They're onto IG, they are onto Discourse, they're on the social media. More than half of our audience have no idea what they are all about. But they are all there because they are the digital communities. They are talking about whether or not, right, the BTC is going to go into 250,000. 250,000. To find out the answer, you need to come for our next event in NUS. Of course, I really don't know. On one end, right, my younger counterparts are so bullish. Then on the other side, I'm sure Benjamin Arena, those who are working in the FIs, more stables, and the so-called senior Mendaka generations, you ask them about digital wallet, you ask them about even PayNow or PayLah, some of these guys are still struggling to get on board. So is this something that is investable? Maybe. Is it something that fits their profile? It really depends on your risk profile. So if you have money to burn, if you are really keen on this, if you are techie, if you are really of a different generation, why not? Yes. But if you really, need this money to buy your house, maintain your lifestyle, maybe you want to try different assets. You know, the traditional assets like commodity, goals. I think Rina have covered quite a fair bit. So really it depends on your profile, in my opinion. Yeah. So let's go even more deeper, right? After this three channels, let's go even more deeper. Investment always carries risk. Now we know the world is all crumbling, right? We have multiple wars coming, right? You know, it's at one time, now Trump is saying that, you know, let's take over Gaza, and then we have the North Korea, South Korea challenge. I don't know what's going to happen to Panama, but definitely there's no more Gulf of Mexico. Now it's called Gulf of America. With all these geopolitical tensions, cross-boundary trades is definitely going to be impacted. With global tariffs ups and up, right? Mexico, Canada, they've already started. China have already started, and more is to come. Where are the bright spots in terms of investments? I think this is what I want to throw out, you know, for Benjamin and Rina. Where are the bright spots amidst all this volatility, amidst all this risks? Right? It seems that any assets are no longer safe. Where are the safe havens for investors?
Crypto. No, I'm just kidding. All right, so let me just start. Okay, so this is not a question which I can directly give an answer, and you make a lot of money tomorrow. Not so much about that, but let me just put things into perspective. Okay, so it's really all about having a very healthy, balanced portfolio, right? So overall, there are no asset classes that move in a similar direction at the same time. But however, moving forward, we do think that what I showed just now, with inflation staying high, above 2%, very likely it will be so, based on Donald Trump's tariff policies, everything made in America, things are going to get a little bit more expensive. This will actually show that the multi-asset model actually do quite well in the next at least 1 year to come. Okay, so when it comes to cross-border, all these different type of signals, we call it, right? So let me just put things into perspective in terms of, maybe from an AI point of view. Okay, so AI implementation. So AI has actually played a very interesting role over the years, especially in the financial institution, even in the investment world itself, right? Within Standard Chartered, even UBS, which I used to work for, we've seen a lot of models, right, running at the back of AI implementation. Okay, so long ago when I first started my career, 10 to 15 years ago, hedge funds were already talking about algorithm-based trading, algorithm-based investing, right? So algorithm-based trading means they actually capture the longs and the shorts, right, of the markets, and they try to see where the market directions are going. Okay, today it is a lot different. The AI models at the back of investing are actually capturing 60 to 100 signals every day in the markets. You're talking about cross-border signals. You're talking about things like maybe equity markets, long shorts. These are the type of signals. And this computing model actually continuously learn this trend. And eventually, together with human intervention, check and balance, it actually translates into a very, very meaningful investment experience for our clients. Okay, so with AI approach, we call it the signal detecting. So we use signal to actually try to see, for example, cross-border tensions, what are the opportunities out there, treasury yields, the so-called dislocation of yields which we have seen, right? So for the past couple of years, we saw the yield curve inverted became uninverted. So those were also some of the signals which AI models have actually eventually picked up, right, and managed to translate that into a meaningful portfolio of our clients. So honestly, I think at this point of time, yes, it may be a little bit difficult. S&P 500 made a very good run of 26% last year. Will it be 26%? I don't think so this year, right? But however, having said that, I think having a good balanced portfolio at the back of very good so-called allocation, which I mentioned just now through different so-called means, and also AI-backed models. I think this has actually benefited our clients. Yeah, this is for me.
I agree. And I mean, for me, and, again, this is no way, advice. I mean, I think fundamentally, in terms of what to consider, your own sort of appetite and portfolio, and as Rina also, it ties to your own sort of risk appetite and your but fundamentally, I think so. So I mean, I want to tie back to Prof's earlier point. So something like climate, for example, I think you're looking at some of again the initial knee-jerk reaction, but the fact of the matter is climate events and impacts are real, right? The forest fires, the floods, these things are happening, right? And so I think at least if not for anything else, I think businesses are also internalizing this as part of resilience. And I mean, even for the regulators, we're sort of nudging them. And one of the projects that we undertook was a project that we tried to look at, for example, both green data, but also looking at things like geospatial data to look at where physical assets are located. And it's not to say that if a company has all your assets in a physical, that is very deterministic that you then rule that company out as at risk. They could well have very good mitigating measures in place. So ultimately, it goes back into again looking at the fundamentals, doing your homework, looking at again what is the company in that sort of environment. Are they well? So, but I mean, I think the point on climate there was to say that look, it won't go away in all shapes and sizes. I think people, again, if not for anything, even from a resilience, continuity point of view, those things are real. So I think that's one factor. The other one is technology also moves very, very rapidly. It's easy to get caught up in the buzzword of the day. These days, any AI firm, you think, I will jump in, because that's the way. 2 years, 3 years ago, that was the same with blockchain. Every blockchain company was the promise of the future, right? So again, I mean, I'm not saying that. I mean, within that, there are winners, there are losers, there are good ones and bad ones. But you always have to make sure that again, you make sure you do your homework, and again, ultimately look at what's the underlying fundamental business of the company. Right? Are they speculative? Are they building on hype, or do they really have a product that you think is something that's? So I mean, from maybe there's the regulator mode, I would say, do your homework, look at and in a troubled world, we all survived a global pandemic, and the world didn't die from it. We came out stronger. So again, these things will happen in crisis moments. There will be opportunities too, and you just have to be nimble. And I hope that gives us some. but that's I guess the HO regulator conservative suggestions.
Thanks for sharing. Yes, and since we are here in the school, it's one of the top university, top 10 in the world, based on the QS ranking 2024 and 2025. I'd like to do a shift a little bit from all the cash and crypto into career. And there's our panelists are representing organizations who have been very supportive of NUS graduates. They have hired a lot of them, not only put them through some of the internships, but also many of our graduates have found a lot of joy serving all these organizations. So actually, in light with where we are right now, and actually NUS, we are trying our very best, trying to keep up with the times, honestly. Just end of last year, over the Singapore FinTech Festival, we launched Artificial Intelligence Governance in Global Capital Markets together with International Capital Market Association. We flew in some of the top leaders from US and London to come and share with our course with all the people out there. And last year and this year, we have launched a lot of AI courses. Last year, we also launched our quantum computing classes. So in light with all these new tides that's coming out, right? And you guys are the professional in this because you work with banks, you work with the financial worlds. What do you think are the skill sets that's important? How do you think that some of our audience, and some of them are really, these days we practice lifelong learning, right? Continuous education and training. What are the skill sets that they should be picking up so that they can make sense of this volatile world that we see right now?
Sure. I'll take a step at it. I mean, if there's one thing I was, very grateful and appreciative of my time in NUS, and I recall we're thinking back. If you ask me today what I remember from the classes, I probably can't name 2% of what I remember from the top. But I think what was important was a lot of emphasis was also put in, not just on the subject, but a lot of the thinking that goes behind it. And a lot of it, back then, there was a strong emphasis on multidisciplinarity. And even, so 2006, or, so I was, graduated then, so, you work out how I started. But those sort of things, again, at that point already, it was pushing that boundary. Say, look, again, you look at a single domain, it's not going to be just engineering, just going to be, architecture, just going to be, arts and social sciences. Each way that you look at things are very different sort of perspectives and facets. So I think that's something that, even looking now, continuously, I'm very thankful for that sort of training and rigor that the school, the university gave back then to sort of stretch your thinking beyond a very traditional domain. And I think those are the sort of skill sets that you really need to be able to pick up. As Prof said, I think the university also is equipped with a lot of this. So it's one where the realities of the world is going to be, so rapidly evolving. And I mentioned, 2 years ago, nobody would have focused so much on AI, Gen AI, what is impact. Suddenly, it's become ubiquitous with everybody's daily vocabulary. I'm not sure what will be the next, topic of the day in 2 years' time. Right? And so again, you just need to be able to be nimble enough to look at these things as they're going on, be able to pick up. And I think the other sort of recognition and realization is these days actually, you need some who have decided to go very, very deep. And that sort of skills requires a lot of investment, study, and they become experts and specialists in some things. But you don't need the whole world to know deep AI coding and those sort of things. We want more, but that involves a lot of investment. For the rest of us, I think you need to be able to seize these opportunities, be able to apply, understand what its implications are, and then move on and be ready to then adapt to the next, So I think those are the things that, again, at least, coming from where I said I've looked at how these things evolve, it just changes so rapidly. So I think that sort of ability to look across boundaries, the ability to move very quickly, and the ability to know when, if you need to tap on the relevant deep experts, you have access and how to get those access or resources. I think that's, again, the skills and that you need to have in this world.
I agree. I think the multidisciplinary approach is really a very good way, especially to ensure personally within your own personal capacity to have a good check and balance. No doubt, I do believe that when it comes to potential, I think technology has endless capabilities. I think there's a lot of potential out there. Right, you're talking about not just the big bang, dazzling stuff like your driverless cars, not just about very, very big AI projects like robotic surgery, for example, but just very, very simple tasks that we do every single day, right? So widespread of AI adoption is really not about the big stuff, but it's really about simplifying and streamlining our lives every day. Right, so things like, for example, chatbots in our life. So this is a reason why I believe that when it comes to technology, I think the potential is really limitless. So chatbots has absolutely simplified our lives. So for example, very, very simple example, like in financial institution, right? You may like banking, you may like financial, but we can always complement it with technology. For example, today, if I have an annual card fee being slapped on my statement, right? So how do I waive it? The traditional way is I pick up the phone, I wait for the operator, maybe press 9 to accelerate that. But that's not anymore. I hope you're banking with the right bank, okay? So that's not the way anymore, okay? So you can just use the chatbot, just type waive fee waiver. Then automatically you get a message in the next 5 working days, right? That it is being waived. Okay, so these are the very, very simple things which simplifies our lives, and eventually I think will get you somewhere. So long story short is really about complementing different curriculums, different segments to make it a very, very good balanced life. Yeah, that's no problem.
Thanks. This is really heartfelt. You know, on the parting notes before we open up to the Q&As, just maybe one or two lines from our panels. You know, how does investors actually identify the future opportunities?
Okay, so I'll go first. So personally, how we identify emerging trends or how sustainable a trend is how it will benefit the wider audience. Okay, of course it must be supported by the government, right? So how it benefits the wider audience, okay, as a whole. I mean, AI comes in so many different forms. Some forms are destructive. I'm sure all of you agree. But there are some ways where AI actually make our lives so much better. I remember back in December when I was in an airport going on a holiday, and I just pick up, because technology is really, I love technology. So I pick up a technology magazine, and I chanced upon this article, right, that actually states a collaboration between Toyota and NTT. NTT is a telco in Japan, right? So they were actually they were collaborating to roll out AI software, right, that would actually help the driver to detect the accident and prevent it. So the AI software actually takes over the wheel, right? So it works for me. I mean, driverless car, I don't think it will work for me because I like to drive, right? So I won't buy a driverless car. So, but I think this software will work very, very well for me. So imagine if a car that you have, you're behind the wheel, and this car can anticipate accidents, right, and take over the wheel and try to avert it, right? This is really true. Right. So, I mean, in view of that, honestly, I think trends like this, so besides automotive, I also like the field of, AI in medical field. Honestly, I feel like there's a lot of potential and there's still growth story in medical field. I mean, a lot of focus are on like robotic surgery, companies like Intuitive Surgical, I mean, the bigger companies, right? Intuitive Surgical, Medtronic, these are big guys, right? But because they also have fat pockets, right? That's why they can invest. But let's not forget the smaller companies, right? So this kind of smaller companies, and I think the potential in healthcare is still huge. Some of the untapped areas in healthcare includes diagnosis, AI, using AI to diagnose patients more accurately. Physiotherapy, I think this is something that is more or less very untapped when it comes to AI. Okay, so I think these two things would be generally the main things that I would look for. Yeah.
So for me, maybe two things. I'll give a practical sort of suggestion, recommendation, and that's I think Prof mentioned. Be very participative, right? The fintech festival here in Singapore actually is one of the largest fintech festivals in the world, to my knowledge. We've been quite sort of engaged in that. And that's a good opportunity essentially when the world of, especially in the finance space and fintech, they're all in town, right? And so just going, there's a lot of sort of interactions, a lot of pavilions, a lot of sharing. In fact, I think one of the pillars has often been, in fact, the skills and growth opportunities that are there. And of course, the universities are always partnering there. So that's a good opportunity. So, Fintech Festival is one that I'm familiar with. Just basically, the more you interact with the field or the sector that you're interested in, the more you get exposure to what the latest thinking, or where they are on that sort of the curve. So at least I think practical example in what you should look out for, and I think it should be that. At the same time, I think my other sort of counterpoint was, in spite of all these technologies, in spite of all these advances, there are still many things that are, I started with my perennial bugbear, right? When you can send text messages around the world instantaneously, why is it a cross-border payment? Not even very far. Let's just across the causeway. Takes me 3 days, 4 days at a cost that are often so unimaginable. And some of these things, again, you just think back, there are lots of opportunities to innovate and push the boundaries, even in very traditional areas. And so I think those are the ones where, in spite of all we started this conversation, all the geopolitical sort of changes and troubles and all, actually on a day-to-day, there's a lot of things that are already sort of, have opportunity to grow. There are new things that are being, ventured out. And those things, I think, from a direct application point of view, even if it's not from an investment point of view, if it just makes everybody's lives better, I think those will be things that we should sort of support and find a way to push the boundary. So those are at least are my sort of thoughts on.
Thanks. Thank you. Well, I've been thinking about this long and hard, right? So almost throughout my life, because I love to make money. Yes, I'm possibly the first Singaporean, or among the least Singaporeans who claims that we really want to make money. But when I really went through what I went through, to know what I've learned, actually, it's, one word of caution for all investors: invest at your own perils. Invest at your own perils. And finally, I've decided that the one way I can make money is invest in knowledge. Yes. So I strongly recommend all investors, take up some time, pick up a course, find your knowledge gaps, right? Yes. These days we are supported by WSQ, SSGs. If you're Singaporeans, if you're not Singaporeans, it really doesn't matter, right? Yeah. Set aside, learn, and then what's the downside, right? You do not fall into scam, right? What is the upside? You make tons and tons of money, right? So in my opinion, if you invest in yourself, you will always make money. And then with that, I would like to open the floor to Q&A from anyone. Please. Yes. Yes.
Can I speak over here?
Sure, yes, please.
Actually, there are a lot of things I want to ask, but I want to zoom in on quantum computing. Okay, what's the difference between AI and QC, quantum computing? And will QC eat AI's lunch? And a big hurdle for QC is it requires very low temperature, something like minus 270 degrees Celsius. And I read a couple of weeks ago, this Swedish university, I think it's Swedish, they managed to come up with a small chip that can lower the temperature to that, about 273 degrees. Because the bits required for quantum computing is qubits, and qubits are very unstable. The calculation is very unstable, so it must have very low temperature. Any little difference, it will go off, give the wrong answers. So will this, the Swedish University discovery, is it a game changer? Will it be something like DeepSeek, which will revolutionize quantum computing? And will it be a good investment to invest in? Will it be a good investment to invest in QC companies? There are small ones like IonQ, Rigetti, and all that, and there are big ones which some people may not know are the IBM and Honeywell.
Okay.
That's all.
Thank you, Darius. That is buy one, get two free, because there's 3 questions in there. Yes. This gentleman question is right up my alley. Maybe, with our respects of our panelists. So I'll answer this in totality. Right, QCs, for the benefit of those who are not aware, this is called quantum computing. Right. I think first question for investors is, will QC eat AI lunch or not? Honestly, is AI having lunch in the first place? I think this is even debatable. Okay, so the development of a QC is at least 10, 20, 30 years down the road. Yes. Our College of Design Engineering, we have a lot of guys working on this. Our School of Computing, we have tons and tons of professors and PhDs working on all sort of different solutions. In fact, I was in Zurich last year, right, as part of the Point Zero Forum. We were already talking about quantum. Right, financial institution right now is facing one of the major challenges. Right, if you talk to any of the technology and operation peoples, they are talking about how do we make our financial institution as well as our government institutions quantum safe. So quantum cybersecurity is a big issue. So if QC is able to resolve that cybersecurity, I think that lunch is big enough for them. Right, they don't have to come into AI, in my opinion. And then just to also share as well, NUS were one of the leaders in this QCs and quantum. Right, yeah, it's over on the 28th of July. I vaguely remember we were hosting about 28 researcher scientists right here in NUS. And they come from Germany, Sweden, Europe, Japan, even Thailand, close about 15 over countries. They are all here because we are organizing a quantum computing conference together. It's a closed door, right? Yeah, the people who's carrying waters are PhDs. Right. Only the professors and the associate professors are talking because, we are talking about codes, we're talking about algos, we're talking about all sorts of different, very, very rough stuff. And 3 days, everybody goes away and saying, we need to come back here in NUS again because there are so many things that they have scratched on the surface. And this is where we are now in terms of quantum. So I hope this answers this gentleman's questions.
May say, definitely, indeed, that's one that we're also studying very closely and understanding its impact. One interesting fact I was told, I have not verified it myself, but I was told that one major global bank, in fact, it's probably one of the largest firms that are hiring quantum talents out there today, because there are very few quantum trained experts. So in fact, banks are also looking at this, and so I can't tell you whether it's going to eat AI's lunch or it'll be tomorrow's new topic, but it is something that we definitely, I think, in the finance sector are trying to understand better and expressing, especially from the sort of resilience and security perspectives.
Okay, thank you. I think there's a gentleman over here that asked a question earlier. Yeah. Yes.
Good evening, panel. My name is Tim. I'm from the Arts and Social Sciences Faculty, History class of 19, so that's just above political science. I would like to bring to attention another topic, which is quite topical, because just last month I had chats with Mr. Ho Kwon Ping as well as the Malaysia embassy staff in Singapore, and that's about the Johor Singapore Economic Zone. So basically what Mr. Ho, Tuan Ambassador and his staff, they are cautiously optimistic about it because they've seen previous instances like Sijori. However, they also see promise. And the Malaysian ambassador himself also mentioned that there are other things on the horizon like Kulim Park, East Coast Economic Zone. So perhaps I'd like to ask panel from your opinion, what do you think of this upcoming Johor Singapore Economic Zone? And maybe even looking closer to home, are there any investment opportunities in maybe Malaysia, Singapore, Indonesia that we could take advantage of beyond just the China and the US debate? Thank you.
Johor Singapore Free Trade Zone. Anyone?
So this Johor Singapore Free Trade Zone has been on the Singaporeans' mind for a very long time. I think the biggest hurdle, if you ask me, I'm Malaysian by birth, by the way, but the biggest hurdle over here is really the currency. Am I right? So in any kind of investments, be it you buy a property anywhere, right? It can be in UK, it can be in Australia. The first thing that will come into your mind is really the currency risk. Okay? So unless you find a way to do without it, to hash it in a certain way, I think it is perfectly fine to go ahead to actually either buy a property. Because if, let's say, I think this whole free trade agreement thing would benefit many sectors, right? Not just the property markets as well. Talking about goods and services, how we travel from Johor to Singapore, the transportation, the ease of transportation, everything would benefit at a glance. Okay? But in terms of investments, whether you would make money by investing in Johor, either through whether you buy a warehouse or you buy a property there, there would still be the element of a currency risk over there, which you would have to think about and probably factor in terms of your future, profit projections. Yeah.
Yeah, no, I'm not sure if I have much more to add other than, I think again, if you look at the, realities of country like Singapore and even Malaysia, as things get more contested, if there are economic arrangements that are helpful for especially like-minded countries, regions in a contested world, it's always better to be working collaboratively from that perspective. So at least I think the larger economic impetus and political sort of sort of drivers for that can be assessed, and you make what it is. I do think that indeed, significant investments into infrastructure will have to also be put in, and that sort of resolve and all. Will have to pan out, for it to be, fully viable. But from a Singaporean, perspective, awesome if I can. I was with my kids. We went to Legoland a few weekends ago, and just crossing the border and the space, and if we could do it a lot more, as Rina said, infrastructure follows, the trains follow. These things will make that sort of commute a lot more viable. And then again, these calculations again of whether it's a right investment. I think you can make it that time. Yeah.
Thank you. I think there's a question over here. Yes.
Hi, my name is Casey Tan. I'm a fund manager. Maybe before I forget, I think Rina mentioned about the chatbot to waive our credit card fees. Can I suggest maybe you just waive all fees forever, and I will switch to become Stan Chart Bank client. I will gladly do it. Okay, I'm actually a NUS alumni. I'm from the TDP program. I think that's the precursor of USP. It's nice to be back. It's nice to hear from alumni. I think this is like family. My question is, I've also gone through Trump 1.0 and now Trump 2.0. And Trump 1.0, we have sleepless Sundays, checking our apps, checking the news. There will be tariffs and so on. But Trump 2.0 feels a bit different. It feels more coherent. It feels they are more targeted. So my question is, I think it will fall back on the topic China again. Maybe can I have your views? How hard do you think the Trump administration will hit China this time around? What are the levers they can use? What are the areas they can focus on? And my second question is, I think Rina mentioned about high-yield bond space. Can you maybe provide some clarity or some color on which country and which sector do you think is a good area for investors to look at? Yeah.
Okay, I'll start with the high-yield bond space first. So just now I mentioned is the US short duration bonds, high-yield bonds. Okay, so US short duration high-yield bonds are basically bonds that are issued by US corporates, US private corporates. Duration range between 2 to 3 years, 2 to 3. We believe that this is pretty much, at this point of time, because the credit spreads are still relatively healthy. Okay, so in layman's terms, just to let you know, credit spreads healthy means the price is not overvalued, right? So it's quite cheap to buy into it, and there is potential capital upside. Okay, so where there is, over the years, we have seen credit spreads in the investment grade segment consistently start to narrow, okay, especially when the yield curve start to uninvert itself. So we saw that just about slightly over a year ago. Okay, so that has caused the credit spreads of your investment grade bonds start to narrow again. But what is more appealing right now is, of course, at the back of my mind is really the investment, the high yield bonds issued by US corporates, duration about 2 to 3. This is what we like at the moment. And also at the back of the fact that these bonds have very, very low default risk at this point in time from what we see. Also at the back of the fact that we believe that Donald Trump would, the support from that would continue to support this particular space as well. Okay, so on tariffs, I absolutely agree with you. I think this time around it does feel a little bit different. Mainly also because possibly that we have a different Treasury Secretary at this point in time. We have Scott Bessent, right? He talks a lot. Markets have a lot of hopes in him in November, December, where he was nominated to be able to moderate the tariffs a little bit more. Okay, so when it comes to tariffs on China, personally, I think is how much is China willing to give in, right? It's about that. But at this point in time, clarity is nowhere near. And at this point in time, I do think that there's a little bit more of aggression coming to China. Because of one thing, they are more prepared for Trump than ever. Okay? They have learned from Trump 1.0. So right now, we do think that I impose 10%, then I come back with another, then China comes back another 15%. Okay, so I think that is also driving the interest, the yield curve at the same time. So central banks are waiting for a lot of clarity from a tariff point of view. So that was also one of the reasons why FOMC put the rate cut on hold in January, because really lack of clarity on the tariffs, right? If you look at a broader topic of tariffs, right? If you look at Mexico and Canada, right? So he mentioned, Trump likes surprises, or he likes to surprise people. So he said, I'm going to impose tariffs, right, on Mexico and Canada. And then the next day, say, oh, it's okay, I will take that back. But just a few days ago, he said, I impose tariffs on steel and aluminum. And guess what? Who's the biggest importer of steel and aluminum? Mexico and Canada, right? So these are the things which I think lack clarity at this point of time. So my answer is really, I think we really need to wait for a lot more clarity. But at the same time, when it comes to China, if you're talking about opportunity, right, China has learned from the previous Trump. And honestly, fighting back in tariffs will not help the economy, right? What will help the Chinese economy at this point in time is to try to stimulate domestic consumption, domestic growth. That means the future stimulus that we should see from China should be aimed towards domestic consumption. Because don't forget, right, what's the formula for GDP? You're talking about consumption plus investment plus net exports, right? If you can't do anything about the net export, then you got to do something about your domestic consumption. Yeah, so I haven't given a full answer whether you make money out of China, but I think this is what we should look out for. Yeah, thank you.
My only cheeky addition to I guess what Rina has already covered very well, and by no means I'm sure the SCB card has its own considerations. But if you don't want to avoid the card fees, then use debit. Use your faster payments. That's why we're trying to link it cross border, so you can also make your faster payments without credit card fees. But no, I mean, yeah, I agree very much with what Rina was also sharing. And I think people are also, it is Trump 2.0, but the world is also now coming in knowing Trump 2.0 or of a better view of also it's not the first rodeo for everybody. So I think those things are at least showing why we're not sort of swinging to that sort of extreme responses just yet.
Thanks. Rina have certainly covers all the angles, so fantastic.
Thank you.
We have one question here.
Yeah, hi. I have a question regarding DeepSeek. Let me quickly read from my notes here, sorry. We seem to be at an interesting juncture here. Western and Chinese AI companies seem to be taking divergent paths. OpenAI has reported operating losses but continues investing heavily in AI infrastructure, including buying more GPUs from NVIDIA. Alphabet and Amazon are ramping up spending, 60 billion and 100 billion respectively, on AI and cloud infrastructure. DeepSeek's approach could theoretically reduce costs for training large AI models. If their method proves scalable, companies like OpenAI, Alphabet, Amazon could spend less on AI development. So the question is, would they adopt similar techniques, or would they stick to their high spending strategies?
All right, I'll try to take a jab at the questions. I think professionally as a VCs, I do think that watch out for DeepSeek. You can argue whichever way you want to feel, right? Yes, because this is highly polarizing, right? Some of you guys who are competing with DeepSeek, right? You have invested in AIs. You already have chosen where you want to stand, and so DeepSeek actually represents a brand new technology power that was unknown to the world until 14 days ago, right? This is very much like, in 2018 when the sanction of Huawei is actually started. Before that, nobody really understand who is Huawei. Huawei is just a guy who is just doing, it's like Ericsson and Nokia, it's just back end. Until we see their handphones on the table, then suddenly everybody start to look at this. And what Huawei did in 30 years, DeepSeek managed to do that in 18 months. This company started in 2023. Not 2003, it's 2023. So if you ask me, I worry because, after DeepSeek, what else? We have deep search, deep weight, everything that is deep. How many more disruptive startups are we expecting? So when I look at all our portfolios right now, immediately I had to revalue many of them in light of this new AIs. And this has, Donald Trump's have made very wild statements, but one of the statements he said correctly is, this is a wake-up call for US community. Accurately said. I think this is a wake-up call for all of us as well. And many of us, they don't know. NVIDIA is one of the top companies in the world who has benefited from this AI boom itself. Do you know that 22% of their revenue of 60 over billion actually transact through Singapore? Can you imagine if there are more DeepSeek company over here using our services, right, supporting our banks, borrowing from banks, issuing maybe green bonds or even tokens, right? How much more better will be Singapore economy? I am very, very wishful thinking, naturally, being a Singaporean. But this is definitely an area that I do want to pursue. Whether you call it themselves DeepSeek or Deep Search, whoever you are, I hope that you have an office here, your R&D is here, you hire from NUS, you work with our researchers, you send your people over here for our courses and training. Yes, make us part of your success so that we can all become a world champion together. This is my take. But, I'll let our...
Yeah, no, I mean, I agree with the discussion and what Prof's sort of reply. I do think DeepSeek, again, caught many out of the blue, but I don't think they will be the last one. I think again you'll start to see many new models. The bigger question I think would be to reflect what is the use case of Gen AI, right? And that I think will then power whether there is sustained usage and or whether this is just today's lunch, right? So far, I think we are good at doing the first level work as tools, as enhancers. I don't know whether Gen AI has really gotten to that full maturity yet of changing entirely, business functions, structures. Those things are still early days. So I think, businesses are trying to then, we've used this very good, well for things like the chatbots, the autonomous sort of function, but we've not totally replaced full functions just yet. Now, whether we can get there, those things, again, depends on how the use cases evolve. So that's to sort of set does this technology potential have the full legs to become something truly game-changing? I think those things, the jury is still out there. It's still, in the grand scheme of things, still quite early days. So I would say, look at the companies, but also look at where this technology is going and whether these things have more use cases, applications.
Okay, so just a short one to share. I agree. I do think that whatever that DeepSeek has revealed is really just the tip of the iceberg. I think there's a lot more which we may not know, or which is bound to be revealed in time to come. Okay, but however, having said that, like what they have both shared, I do think that there would likely also be a lot of hurdles along the way as we find out more. We have already seen things like companies banning DeepSeek, right, from being installed on corporate softwares. So, those are just the smaller things. But the grander scheme of things is really about the fact that, US actually moved even faster in terms of sanctions and even in terms of tariffs, right? But however, I think the potential is great. And I think the adoption, in terms of AI adoption, if it really moves in a very meaningful way to improve lives, to successfully implement projects that would likely be quite a market changer in certain sectors, that will likely bring DeepSeek to greater heights.
Well said, well said, well said. Well, in the spirit of time, all good parties must come to an end, unfortunately. However, do not fret, our panelists will still be around after this. So please join me and give our esteemed panelists a big round of applause.